Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Friday, July 15th. It's 6:16 in the morning as I'm starting the video. And as always, please run your player at 1.5x. Taking a quick look at futures, we're marginally green, just fractions across the board, nothing too notable. Over on the earnings front today, we've got some follow-up to JP Morgan and Morgan Stanley yesterday in the financials. We've got Wells, Citi, BlackRock, PNC Financial, U.S. Bank Corp, Progressive Insurance, and United Health were the big ones that I saw. Also, don't forget today we've got July options expiration. So take a careful look at your positions. Make sure you don't have anything that you've forgotten about as far as, on your option positions. Decide if you want to roll it out and stay with the position or close it out. You don't want to get any rude surprises tomorrow being assigned a bunch of shares you weren't expecting. So make sure you take care of that. Okay. Couple of interesting last couple of days. We've had a lot of bearish news. We had the CPI shocker, 9.1%. Now they're talking FOMC, quite a large percent, pricing in a 1% increase in a couple of weeks from the FOMC, maybe 0.75, maybe 100 bips. We'll have to wait and find out. But the interesting thing is, and we'll see this better on the 60-minute charts in a second, even with all that bearish news, they have not been able to really break the market. The big down openings have been bought up intraday. So there's been some dip buying, and I find that relatively interesting. Now this morning, I think we've got University of Michigan consumer sentiment. I think that comes out at 10 o'clock. But there again, we already know that survey has cratered. I think it's lowest of all time, which is notable because I think that survey goes back 50 or 60 years. So, it can't get really much worse than where it's at right now. So, I think we've seen a lot of bearish news. And like I say, I think it's interesting that they haven't been really able to break it. So let's dive into the charts. And what I like to do is, just as a snapshot, is find where price is in relation to trend lines and moving averages, and then take a look at the oscillators. And you can see, price remains below all the moving averages. It's below the downtrend line. If we move up to PPO momentum, it's below the zero line. So that keeps it in the bearish regime. And same thing for RSI. So the posture, at least on the daily time frame, remains bearish. What would it take to really change that? Well, you'd want to see the momentum indicators turn up. You'd want to see RSI break above 50, and you'd want to see price begin to recapture the 8-day, the 20-day, break out of this downtrend line, and break out and proceed higher. When we go to the 60-minute chart, you can see this is the last 2 days that I've been talking about. What was this? Wednesday, we had a big gap down, and they bought it up. And then yesterday, we had an even bigger gap down, and they bought that up. Now, that has resulted in a lot of nice intraday trading opportunities as price recaptures levels from below. So that's been very productive. But still notice series of lower highs and lower lows since this peak. So, overall, not that productive of a setup. I mean, like I just said, on the daily chart, everything still remains bearish. What I would be focusing on today and early into next week is, number one, well, this little zone between the top of the gap, 371.81, and 373 right here. You can see that going back quite a number of days, this has held as nice support. And I wouldn't want to, if I had bullish intentions, I certainly wouldn't want to see this little support band fail, then fill this gap, and then we'd be right back down to the lows again, where we'd have to, watch that like a hawk, because like we know, you break a prior low, and the floodgates tend to open up to more sellers. So that's what I would be watching on the downside, is this gap. But like I said yesterday, a perfect opportunity as far as an intraday trade is that it came right down to support, held the top of the gap, and then recovered these prior lows. And if you were on top of that, that was, a buy signal. And then it kind of worked its way higher the rest of the day. As we move over to the Qs, similar situation. Price is below all the moving averages. PPO remains below the zero line, which is in its bearish regime, just like RSI, below 50, bearish regime. One thing different here is that we have popped the downtrend line here in brown and remain above it. So you could look at it this way, that we had a breakout and a successful back test of the downtrend line, and now we're still above it. I think to what I would be looking for on the high side today and in the days ahead is to recapture this 290 line. I think that's going to be really important. Why? Because it's the biggest high volume over price bar on the chart. So if you can take out 290, then it starts to open up above that. And then I think the next real test will come in around 295. And possibly by that time, the declining 50 will be in close proximity to that level. And then if price can do that, then you got a chance to come back up here towards 310, where it ran into trouble before. On the downside, you can see that 280 has been important the last couple of days, and then we had several days that reached down a little bit lower. Jumping over to the 1 hour chart, you can see that the last, this was Wednesday, big gap down, right to support at the bottom of this value range, and it held. A great place to try a long after the break below and then the recovery, and then you had a nice unidirectional day after that. And then the same thing yesterday, gap down to the exact same location, held, and then it was more or less up the rest of the day. Today, I think this 287 is your pivot point. If it can break above that, I think you've got some running room up towards the high end of this range, towards 290, 150, right in that area. If it rolls over, I think you'll see some support at 285. That is an important line on the chart. I've got that on my other platform, on my trading platform, I've got 285 highlighted as a kind of an important go no go line, if you will. You lose 285, then you could roll all the way back down towards 280, 281. So I think that's an important level on the chart. IWM really didn't do much yesterday. Same general type of analysis. Price is below all the moving averages. That puts it bearish. We can see over here the PPO is below zero and the RSI is below the 50 level, keeping it in its bearish regime. We did have this divergent low. You can see here at this level, we had PPO and RSI low. Then we went lower in price, but we went higher in PPO and RSI. So I think holding this 167, 168 area is going to be important. You can see the area of value that has been created with the profile bars. And if you drop below 168, 167, not a lot to hold it up, or else you come back down to 164. You can see here we gapped down yesterday. And unlike SPY and QQQ, while it did form a base here at 167 and made its way up towards 170, it was not able to fill the gap. Whereas on SPY and QQQ, price pretty much made it back up, and in the case of QQQ, managed to have a green day. So a gap remains here between 170, 171.32. We've got a downtrend line coming up, and price is still below it. So that's going to be a little double layer of resistance there at 170. You've got the uptrend line, and you've got the bottom of the gap acting as resistance. So therefore, if price can break above, then I think there's a good chance to come up here to 172.50, and then possibly the top of this narrowing triangle. Moving on to the FATMAAN names. Meta had nothing yesterday. Gap down. Settled into support here at 158 and then just spent the rest of the day there. This has really lost a lot of energy over the last couple days. We had, we found lows down here at 155, made a big run up to 170, was rejected, came back down, same location, big run up, almost it did get to the gap and got rejected, and then, over the last several days have, worked its way back down. Obviously, from this chart, you can tell that this 155 has got a hold, or this thing will most likely head lower. So today, I think it's pretty simple. This 158, where it settled in yesterday, is going to be your pivot point. Apple has shown some remarkable outperformance, relative strength, however you want to put it. Notice the difference in the postures of the indicators. Here you can see, one, in price, you've got a well-defined uptrend channel. You've got PPO that came back down to the zero line and reset and put in a bull cross. That's exactly what you want to see. And RSI came down to 50 and, made a little dip below, but then quickly recovered. Wednesday, we had the gap down with the market, came right down to our 142.50 level, held like a champ. That was an important line. You may want to even make that bolder on your platform. Why? You've got a largish volume over price bar, resistance, resistance, support. So that was a great entry if you got it. And then they bought it up. Yesterday, they gapped it down and immediately went to town buying it up. You had a really nice entry here at 145. Quite a number of guys in the trading room got that and were ready for it. It's important because that was a large, this whole area here has built out a value area between 145 and call it 149. And price just worked its way from the low side of the channel, got past the midpoint here at 147. Excuse me, and then back into this old gap. You've got some resistance at 150, and then you can see back here we got to 150 where it fell apart. So you've still got between 150 and 151 for that gap to fill. And if you're trading it, or if you held your position overnight and you make it up to fill this gap and tag the top of the channel, that would certainly be a place where I would either roll higher or simply take your profits. You certainly want to go to the bank right here at the top of the channel, and after the gap has been filled up towards 151, 152 area, and not really try to pressure luck that this thing's going to keep going. What you can do is if it does break out, then you can either reestablish your long with a new set of stops, or if you rolled up to a higher strike and bought some more time, say into next week, then you could set your stops a little bit below 151, I would think would be the right move to make. Tesla offered some real nice opportunities the last couple days as well. This was Wednesday. Disaster bar down here. Probably like an oh my God moment. That was a pretty big drop. But then your buy point was on the recapture of 690, and then it went right on up, gave you quite a number of hours to make a decision to kind of get out of your once it's stalled. That would certainly have been a place to go to the bank, and if you thought it was going to keep going, roll up to a higher strike, and then you would have been stopped out on this final bar of the day. So then yesterday, same type of idea, gap down, oh my God moment, but look where it stopped, right at 690. Gave you really 2 hours to buy that. We had the first one down, stopped right at 690, and then at the beginning of the next bar was down at 690 as well. And one thing to notice here, one of the guys in the trading room at the end of the day made the point that if you can see this little wick that formed right here on this second bar, he took that short on the break of 690, thinking it was going to go down. But when price recovered that, he got out of his short and went long at that point, because if you were short against 690 and then price comes back up through, you're stopped out. But also having that mental flexibility to switch to long is really what it's all about. Don't get all wrapped up in the, the $500 or however much you lost on that first trade. Price was telling you on that recapture from below of a key level is your chance to get long. So keep in that mental framework of yours, I'm a leaf on a stream. I go with the flow. I don't care if it goes up or it goes down. I just want to be on the right side of the flow. And if you did that, it worked out great. And even here, as this 703 was recaptured, you still got a nice trade up to 715. I think today 720 is really going to be your pivot. If price opens low and comes back to 703, 700, I think you can try that long. And certainly if price, opens somewhere in the middle here and then takes out 720, I think you should be long there for 735 and potentially 745. Microsoft also had a really nice intraday trading opportunity. Actually, the last couple of days, gap down, went inside this gap, didn't quite fill it, and then recaptured the top of the gap. That was your entry point. Came right back up here to resistance at 253. And then yesterday, really the same type price action. First bar came right down to the bottom of the gap and held. The next bar took a leg down, but we had this line, 246, well defined on our chart. So, if you were a sharpshooter, maybe you bought that there. If that was too quick, then your second opportunity was on the recapture of the bottom of the gap. And then your second, or actually your third entry, here was your first possibility. Here was your second possibility. And then your third possibility was recapturing the top of the gap. So quite a number of chances there. And then one thing that was, I think, significant about yesterday is price was able to take out this prior high at 253. So today, I think 253 is your pivot point. On any weakness, I would be a buyer there at 253 with a little stop below, and then look for 256 as your first target. You can see here on PPO, put in a bull cross down here. That's a good first positive sign. And RSI is trying to break above 50. So those look supportive of a move higher. Amazon Wednesday, gap down, went below this 107, but then recaptured it. That was a nice trading opportunity to be a buyer there, and even a buyer of 110. That got you up to 112 before things fell apart. Then yesterday came back down, didn't really quite make 107. Yesterday was definitely really not Amazon's day, as it were. It was just harder trading. Didn't really do much. I was focused on 110 yesterday. I didn't catch this here. I was waiting for 110, and it finally got there, but really didn't do much. I think 110 is your pivot for today. It's where the large volume over price bar here is, and if it can hold 110, I'd be looking for 112.50, and then up towards this gap at 114.30. Google yesterday came down for a tag of this 2175 and then worked its way up to close the gap. So it made, well, if you got in here, you could have made, what is that? Possibly $40. But harder trading for sure. Now they split after the bell on after today. So Monday, all of these prices are going to reset. I forgot whether it's 10 for 1 or whatever the split is. But if you've been a guy where $1,000 options are a little bit daunting, pretty much the same thing is going to happen the way it happened with Amazon. To now, those options are going to be a lot more affordable for you next week. And if you have been a person that really has not actively watched Google in the past, just because the options have been so expensive, you're going to want to start getting back into the flow of Google. It's an important stock. It's a big stock. And now the options are going to be a lot more affordable. I think it'll bring that ticker into your repertoire that possibly hasn't been there in the past. Netflix, not a lot going on. I think 174 is your pivot here. It really needs to get above 178 to kind of get something going back up here. And I think on the downside, you should have 171 alarmed in your system, because it was support. And if that breaks, then you probably get a $6 move, $6 or $7 move down to 164. Nice action in semiconductors yesterday. We had been involved back here on the downside. Remember, a lot of this was Micron earnings miss, plunged it lower. A lot of this rolled down, quickly realized that staying short was probably wrong. And what it's done is this now, in hindsight, you don't know exactly what it's going to be when you're involved in it. But now this looks like a bear trap, breakdown, and then come back above the range. Got up here towards 208, settled into this trading range against 202.50, and then yesterday found support there, and then just took off in rapid fashion. So that was definitely a good place to try a buy. I think your second entry point would have been at the bottom of the gap at 207, and now on the breakout. So I think the top of the gap here at 208 is your pivot for today. And to really get this going, you need to take out 212, and then that will open the door towards these prior highs up towards 217.40. Art complex, nothing really happening. The price action looks different than it does on a lot of the other charts. There wasn't any, we had the gap down. They bought up a little bit, but then it died. I think your pivot here on ARCF is 1580. I think you can be long if it looks like there's going to be some buying, and I think you can be short if they start selling it down here to 1520. ARCG is still in its uptrend, but at the low side of the channel. So I think your pivot point is 3650, and you want to see them start buying it here to try and work its way up towards 38 and the midpoint of the channel. If it rolls over here, I probably wouldn't be all excited about a short at 36. I would probably wait until it takes out these lows here at 35.25, and then you'd probably see that leg down start to materialize. ARK K drop down below this uptrend line, below these large volume over price bars. And so I think you can try to be short below 43.50 and see if you don't get a move down towards 41.50, or above, you got an opportunity to get to 45.50. I think 43.50 is your clear pivot point. ARK W looked a lot like the ARK complex in general yesterday. Really didn't do anything. Gap down. Found support here at this large volume over price bar. A lot of reactions along 49.50, but really didn't do anything. I think 50 is your pivot point for today. And then wrapping up, I sent out a trade idea yesterday. I was looking at Micron, starting to poke around some semiconductors after seeing, SMH do such a nice job yesterday. And I came across this for the simple reason that, they had the bad earnings back here that they bought up right away, and it's been working its way higher. You can see PPO is working higher, RSI is working higher, and right here at this 60 line, there's a big void in the volume over price profile. And what I'm thinking of is if, the broader market and the semi group wants to move higher, I think this would be a nice trade, simply because the market has already digested the bad news from the earnings. They bought it. And so if price can get above 60, I think your first target is the 50 EMA. And then your second target is up here at 66. And then you could set a stop down here at, say, 59, something like that. So if you take $1 of risk, you got to your first target up here at 63, you got a 3-to-1. And if you got up to 66, you'd have a 6-to-1 risk reward if it made it that far. And I think that's well within the realm of possibility, because this was a really big level, and you often see that breakdown back test. And then that would be a really important spot for down the road. Why? Because if you break above 66, you will have done two things. You will have re-entered this big value range, and you would have taken out the downtrend line on the daily chart. And so you got two things working for you. Number one, you broke the downtrend line, which would be important. And number two, you re-entered a big trading range where you re-enter a range from below, your target automatically becomes the far side of the box, as it were, the far side of value. So that could end up being, up here at 82. It's not going to do that in a straight line. You've got the 200 coming in. But my point is, once price crosses 66, you're on the right side of the chart. Right side being the bullish side. So I think that's an interesting setup. I've got it alarmed in my platform to take that long when and if it triggers. So let's wrap it up there. Let's watch that Michigan sentiment today. Remember, we've got an OPEX this afternoon at 4 o'clock. We're also heading into the weekend. So those last 2 hours of trading from 2 to 4 are going to be really important, not only because of the OPEX, but also, as a gauge of risk appetite. Are they buying all the way into the bell as a risk on, or are they rolling it over into the bell saying, you know what, I really don't want to hold anything over the weekend in this environment. So it's a good gauge of risk sentiment on where the market is at, on how things trade those last 2 hours of the day, especially heading into an OPEX. So let's see what they do today. If you're new to the channel, thank you so much for spending some time with me. If you appreciate technical analysis and getting a morning game plan every day with some objective levels, along with hopefully some helpful commentary on how to handle different charts, different buy points, etc., please hit the subscribe button, the alarm bell. Would be glad to have you. And then jump over in the show notes. You'll find a link to the blog site where you can drop in your email address and get all my content morning, noon, or night, trade ideas, observations on the market, helpful resources, things like that would be great. And you'll also get an invitation to the trading room where we'd be glad to have you. So hope you guys have a good day of trading and a good weekend, and talk to you next time. This has been Chris Buss with Traders Profit Compass. Have a good trading day.